Now for our featured story of the day, let's discuss 5 million per Bitcoin is the fair market value for Bitcoin right now, according to the high priest, Max Keiser. That's right. He shared this tweet the other day, 19 hours ago. I'm going to read it to you. I chatted with the legendary Howard Lutnick with President Bukele. His recent affirmation that Cantor Fitzgerald manages Tether's $97 billion treasury port blew minds at Davos and CNBC. He is a classic Wall Street BSD who, as one of 24 primary dealers, occupies the nexus of the multi-trillion-dollar US dollar universe. Can you say mega whale? I gave him my pitch. Actually, it was Greg Foss's pitch. Bitcoin is an incredibly cheap CDS on the imploding global fiat money world, and how 500 million per Bitcoin is the fair market value for Bitcoin. His response was a mixture of horror and excitement. Remember my credo, no billionaire left behind. And here's the receipts. You see video or these awesome pictures. You can see they're having a nice reception together. You got Stacy, you got Bukele in the middle, you got these billionaires, you got Max Keiser. You know what I mean? Talking about Bitcoin adoption. So this could be very big news, family. You heard it here first. You can see Bukele with this juggernaut right here. I believe this must be Howard Lutnick. Correct me if I'm wrong, but he is a legend in the financial space and already linked up with Nayib Bukele. And we know Bukele, first country, El Salvador, make Bitcoin legal tender. So yeah, man, this is pretty lit. So that's why I shared this. 5 million per coin is the fair market value. Max retweeted it. So shout out to the high priest. Other recent things that Max has shared. Max Keiser, did you know he invested in Kraken when it was only worth $5 million? That's a 160x return. In fact, Max has his hands in a lot of the Bitcoin related startups. He's just more quiet and incognito behind the scenes, but you bet he's a very smart man. And of course, investing in Bitcoin when it was only $1, and the first international TV coverage of BTC was with Stacey Herbert via the Keiser report. You know what I mean? So receipts on receipts on receipts. Now quoting Saylor when he was interviewed on Patrick Bet-David's podcast, this is a pretty bullish prediction. Bitcoin is on a path to be worth $100 million per coin, which means that the US dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger, back when he was alive, of course, knows this. And that's quoting the Giga Chad. This is officially the most bullish Giga Chad Michael Saylor prediction I've ever covered on the show. Him literally saying Bitcoin will be worth $100 million someday. Now, other headlines, conditions coalescing around billionaire Michael Saylor's $5 million Bitcoin call, being we're discussing a $5 million Bitcoin. And something I shared a few months back, Michael Saylor revealed 3 catalysts which will take Bitcoin to 5 million per coin. Number 1, and this was before we had the ETF family, spot ETF approval inevitable. Lo and behold, on January 11th, they officially went live, 11 of the ETFs, so 11/11, happy 11/11. Number 2, banks custody and lend against Bitcoin as collateral, coming soon. You already know that because now it's officially recognized as an asset class. Now that you got Wall Street and the major asset managers behind it, stacking those sats accordingly. And number 3, fair value accounting rules from the FASB, which got approved a few months back. And I think they're initially going to take place later on in this year. So all these things are ultimately already in the works. So nothing is going to stop Bitcoin from achieving this $5 million goal. Let me know if you agree or disagree with that target. Now, he also shared why you need to own at least 0.1 Bitcoin. So I want to share with you this 2024 prediction from the Giga Chad. Let me read this to you. I think there are only 3 things relevant right now, and here are the 3 things. The halving is coming with 100% certainty. Facts, 60 days out, family. Exactly. And as far as I can see it, most of selling a Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a couple of months now. So we know that's a coming. And then we know there's a spot Bitcoin ETF coming, which is already here now. And when that comes, we plug into Wall Street as well as the entire banking system. And then finally, that fair value accounting is coming. And when that happens, the objective will go away. And it's already been approved, fam. Done deal. And now you're going to introduce this as a conversation into hundreds of boardrooms. I dare say thousands. What do you guys think? They will not move in a week. They will move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see reallocation of assets. At the end of the day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset pari passu to the bond, then you'll see a reallocation from bonds to Bitcoin. Yeah. Do you want junk bonds or do you want the most appreciating asset in human history? No brainer, apex predator all day. And then in the institutional investor side, you've got all of these people holding real estate, holding commodities, holding gold, holding ETF and SP indexes and the like. And if they start to reallocate, and they will, 1% and 2%, 5%, then you're going to have something that has never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. That's right. Let that sink in. In the entire ETF financial world, there has never been an ETF with a commodity with a finite limited supply. You have commodities with relatively scarceness, but not true scarcity with finite limited supply. So Bitcoin's in a category of its own, hence why it's crushing its first month already with over 200,000 Bitcoin through the ETFs in their very first inception month. Now, every other ETF in the world is an asset that is not scarce. It's inflationary. Preach. You can make more buildings. You can make more real estate. You can make more gold. You hear that, Schiff? You can make more commodities. You can make $4 billion worth of any of those things. Preach. The underlying producers produce more of the asset to deflate or depreciate the price. That's how they control the markets. Precious metals, a great example. Just introduce more, dump more into the open market, then the price is going to go down. That's how they suppress the gold price at roughly $2,000 an ounce for the past decade. And JP Morgan Chase has paid upwards of over $900 million worth of fines. That was just one time being fined for spoofing precious metal markets. So they actually pay major fines because they're guilty of doing so. Now, shout out to Emilio Gonzalez. He just gifted us with my favorite Bitcoin orange color. Super. Thanks for all you do and blessings for you, Nipsey, and your daughter, and you're a good man. Here is orange for you. Greatly appreciate that. That's very kind of you, family. So thank you, Emilio Gonzalez. Love and light. So with Bitcoin, when 100 billion flows into the Bitcoin ETF, which we know is a come-in, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot and ETFs of gold because gold is an inflationary asset. And you can't compare it to an ETF on real estate or on bonds or on equity. Also keep in mind, fam, that 80% of the Bitcoin supply is in the hands of the long-term hodlers. So what's going to happen, we're going to have a supply shock and a demand shock this year, and it's going to send Bitcoin parabolic. Just watch. You really have to say, this is the first time we've ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what will happen except that if you reason from first principles, you know that it's actually going to perform better than all the other asset ETFs, in which it's already doing, because the underlying fundamentals are just better. That's right. But let me lay out the possible ways to invest into Bitcoin. One, you buy Bitcoin, the underlying asset. The second, you buy the spot ETF. The third, you buy MicroStrategy. Okay, we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put it in place, parallel custody, compliance, compensation control systems. That's the challenge of that. Now, personally, I think self-custody is very simple. Any human being can do it, including a 10-year-old, but it requires responsibility. So some of you guys, you just don't want that responsibility. I don't get it. Learn how to self-custody, but to each their own, hence why there's options here. Anyways, the closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're going to be getting one-to-one correlation. So for 1 million, you're getting 1 million worth of Bitcoin. That's the positive. It's marginal. It's good collateral. I can buy in a second, no money down, and I don't need to build parallel custody company compensation controls. So all the problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. So if I charge 1% per year over the course of 20 years, and an example, GBTC being the largest fee of the ETFs, they're currently at 1.5%. It means that I kind of take 20% of the money you invested at 1% over the course of a lifetime. Good point. So there's a cost basis of 50 points, meaning I get 10% of your money, approximately. But having said it all, I would pay you 50 to 100 basis points in order to be plugged into Wall Street, and it's not a problem. It is a lot better than the alternative, which is rebuild all of their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy MicroStrategy you can think of as a levered long Bitcoin company that pays you a yield. So I'm not going to call it an ETF because we are not a financial company, but we have 4.4 billion plus a Bitcoin, now over 10 billion. You see how fast that climbed in a few months, family? And they're already 4 billion in unrealized profits. Let that sink in. So what we have done is we have learned the balance of the sheet with debt that costs us about 1.5% interest. So MicroStrategy's advantage of its position as an operating company to do something that an ETF cannot do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we can do. And an ETF can't buy Bitcoin with cash flows. We have a lot of flexibility as an operating company, and we don't charge that fee. So we have now 10 billion worth of Bitcoin, but we don't charge 10 million per year, or in this case, 100 million per year. So the real idea here is, what if I created an investment vehicle that paid you a yield instead of charging you a fee? The complete opposite of an ETF, right? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it. That's called a speculative attack on the banking sector. Let's go. Let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So if you have $1 billion invested and you're getting a 2% yield, you're actually picking up 20 million per year instead of paying 10 million per year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee and if I have cheap leverage, the benefit accrues to the common stock shareholders, because I borrowed 2.2 billion at 1.5 interest and I bought Bitcoin with it. Smart man. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% per year? Well, let's say it's 15% a year. And keep in mind, fam, we're up over 20% for the past week. Then we're scraping 14% positive real yield off of the debt. And so that would be 14% of $1 billion or more, actually 14% of 2.2 billion. So that would be 300 million a year that accrues to the benefit of the common stock shareholders. You see, this is the benefit of being an operating company. We can every quarter choose what we want to do. So some quarters we issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity, other quarters we would just use our own cash. So the answer is there's always going to be a good market and there's always going to be a bad market. There's things you shouldn't do and there's things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, then it should basically correlate 1-to-1 with Bitcoin after you pay the fee. Then you buy the spot ETF. But if you wanted to actually try to outperform Bitcoin, like MicroStrategy outperformed Bitcoin, our performance over the course of the 3 years is higher than Bitcoin's performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets and we sell $1 billion of equity, we actually captured 300 million of accretion to our shareholders. So there you have it. I know that was a mouthful, but very powerful words coming from the Giga Chad himself, the one and only Mike Saylor.
If you've got a business that you love because your family works for the business, it's in your family for 37 years.
Tell him, Michael, what should we do?
And you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin.
So there you have it, fam. Let me know your thoughts on the $5 million price prediction from the one and only high priest of Bitcoin, Max Keiser, who was just kicking it with Bukele and fellow billionaires, orange pilling them, and as well as Mike Saylor, who actually goes as high as Bitcoin on a path to hitting $100 million per coin, with the US dollar effectively losing 99.999% of all of its value. And holla at your boy.